All right, let's bring in Stuart Keiser, Citi's head of equity trading strategy. Stuart, I note in my notes here a couple of quotes playing back to you. This is a very unstable market right now, tricky environment right now. People are really on edge on whether there'll be a soft or a hard landing.
Yeah, I think that's the case. I mean, basically, you had a 12 to 18-month period of positive economic surprise, what I will call higher for longer. Growth strong, rate cuts getting pushed out. Markets were able to deal with that because growth was really positive. Since late June, economic data surprise negative, economic data momentum negative. The market's now trading, instead of higher for longer, trading a bit of a growth slowdown. And to Julie's point, and Guy as well, I mean, that's why you're getting this schizophrenia, is because as growth decelerates, you get near a borderline at which the risks become really big that you could go hard landing instead of soft landing. So our view is that the risk reward is just not what it was a couple months back.
And you think we may be in store for a recession?
Yeah, our economists have a recession in the third and fourth quarter of this year. You know, remains to be seen. Obviously, those recession forecasts have been getting pushed out pretty consistently over the last couple of years. But once you put payrolls down near 100K, I think the market becomes a lot more fragile. And I think that's the situation we're in.
So with that in mind, so we've got a payroll number on September 6th. I'm not saying a bad payroll number means recession. I'm saying what the market will do with that bad payroll number going into this month. That, by the way, I've never heard more people complaining about the month we know is September and we know the volatility. What do you think about that?
Yeah, it's a horrible seasonal month. There's no way around that. To your point on the payrolls, I think it's just that. It's once you get down around that 100K level, we saw it in early August. Even if you were full conviction we're going to soft land, you're still going to get a batch or a cluster of data that might look like a hard landing. And the market's just not sort of positioned for that right now. And that's one of the reasons we saw so much volatility in early August.
The market's positioned for a soft landing.
Yeah, I don't know if I'd call it the majority. I'd definitely call it the plurality. I think the plurality of the market is basically some sort of soft landing outcome.
That's my sense.
Yeah, but I mean, in a few weeks, we went from, panic on that first week of August where people were convinced we're going to have a hard landing. And now it feels like, with the market's really close to the highs, it feels okay. Let me ask you this about positioning you just mentioned, Stu. Like, when you think about, the consumer staples and you think about utilities just outperforming here, they've just broken out. What does that tell you about, the way money is being positioned right now?
Yeah, I think it tells you two things. One, people are getting a little more cautious. And two, that is the stuff that's been grossly underowned, right? That would be your short leg of momentum, your laggards. So I think what you're seeing is a little bit of a rotation going on underneath the surface. Julie mentioned earnings. The only pushback I would give her is the 493, the not Mag 7, actually grew earnings on a year-on-year basis this past quarter for the first time in about 5 or 6 quarters. So I think some of what you're seeing there is, people are starting to broaden out or kind of, buy that second tier of stocks, particularly if they have a defensive characteristic.
But really quickly, cyclical over secular, because that's really what we're talking about. So if the economy, if people are really nervous, you know what I mean? You would probably want to move out of cyclical.
Yeah, I think that's right. And that's why, the healthcare and the staples is doing well. The secular challenge, I think, is the big question, though, is if you believe, let's say, NVIDIA and AI is a secular story, but it's hugely owned. It is the long position of the market. If you get a recession, is that stuff defensive because it's large cap, safe, balance sheet, and secular? Or is it at risk because there's a positioning element to it? And I think that's one of the things the market, NVIDIA will be an interesting test of that, actually, I think.
Guy?
What do you make of the consumer confidence? I get it's backwards. I get it. But this is on the heels of, obviously, the unemployment rate starting to stair step. Consumer credit seems to be extended. It doesn't really make sense to me that people feel as optimistic as they do against the backdrop of what we've seen recently. Does that make sense?
Yeah, look, there's been a lot of moving parts on the consumer side. I think, coming into last Thursday when you had Walmart earnings and then retail sales, I think people were legitimately concerned about after a weak payrolls print, what are we going to see out of consumer spending? To your point, the sentiment numbers have held in pretty well. You could read the Target and Walmart and Ross Stores earnings one of two ways. Either those are strong earnings, a consumer's healthy, or you're getting high income even that are trading down. And you could argue that's a little bit less positive. So, look, there's a lot of moving parts on the consumer side. I think the consumer credit stuff, we've been talking about that for a while. So I wouldn't call that necessarily new news. But I think going into that retail sales print, there was a real concern about what are we going to see from these guys through earnings. And to be fair, it was mixed, but mixed against a very negative backdrop, if that makes sense.